Good morning, Joe. Look, I think you're right. I mean, what's interesting about these results, and I'm just digging through them for the last half hour or so since they hit the tape, they're extraordinarily solid. Just extraordinarily solid. So once again, Home Depot tops sales expectations. Once again, they top earnings expectations. If you dig through the trends here, and obviously coming out of the COVID crisis now, sales trends have been, there's a lot of moving pieces, so to say. But the business has actually gotten stronger over the last 3 quarters. So just like you said in your opening, I mean, despite all these challenges out there, despite all these factors, the Home Depot business is actually strengthening now, I'd say, over the past 6-9 months. I mean, it's a very, very solid report from Home Depot.
We mentioned also that could you go over the history of the last couple of years of the same-store sales comparisons that we've been looking at? And what kind of numbers were we seeing? And then, it's very tough, I guess, to compare. Is that going to ease? And do people really – that's usually an important metric with most retailers.
No, that's exactly right. So, look, what we saw – and I think, this is still just fascinating to talk about. So early in the pandemic, so, kind of April, May of 2020, sales growth at Home Depot, and this is true for Lowe's as well. We'll get results from them tomorrow. The sales growth just surged. Okay. And this happened as these home improvement stores were deemed essential. They stayed open. Consumers at that point were shopping for basic needs, cleaning supplies and such. And then after that, sales stayed very, very strong, is what you were talking about in your opening, as people, once they realize, look, I'm spending a lot more time in my home. I've got a lot more time on my hands. All these home improvement projects started. So then what's, I think, been just as interesting is even as the pandemic is subsiding, so interesting. I'm in Orlando with my kids this week. Tons of people down here, tons of people vacationing, but you still have this seemingly very strong demand for home improvement projects. So, the business has just stayed strong. And if we look at the guidance that Home Depot laid out, remember, Home Depot had not been giving guidance for a while. They did today. So I think that's a testament to kind of their understanding of their own business right now. But what they're basically saying is that they look for the underlying trends they've seen over the last couple of quarters to persist into 22. And again, I think that's very, very telling. And I think that shows kind of how strong Home Depot is performing, and frankly, how strong this home improvement category is performing.
The stock is down more than the averages, I think, of home improvement stocks in 2022. Why is that? I figure if rates are going up, you got, all stocks, you worry about multiple compression with higher rates, but you also worry about whether it affects the housing market, don't you, with Home Depot? Is it a double whammy with rising rates?
No, that's exactly right. That's been the fear in the market. So this decline in Home Depot, and again, I'm going to bring Lowe's into this comment as well. The decline in the home improvement stocks over the last, say, few months now, several months even, has been largely the fear of higher rates. Now, I do want to. So last week, my team and I published a report which I think was quite good. We look back at the past 3 Fed tightening cycles, and the point we make is, particularly in the early, maybe mid stages of these tightening cycles, Home Depot and their shares continue to perform quite well. So we think that these fears of higher rates for Home Depot and for Lowe's here are largely overblown. And I expect what's going to happen as we continue to see very solid results like we're seeing today, that's going to ultimately drive these stocks higher.